everybody, welcome to the TraderMerlin Show. It is Friday. Hope you had a great day out there. I'm sure for those of you who are long some of the indexes, you did okay. Cheers. We have a new whiskey today. Actually, on trivia on Tuesday night, we got third place. Third place was a bottle of whiskey, so it's Slane's Irish whiskey today. Cheers to everybody. Hope you had a great one. I'm going to take a nice frosty beverage because it is the weekend, and it's a long weekend at that. It's apple juice for those of you who don't believe in alcohol. Sorry about that. I'm going to do a bunch of market analysis on today's show. If there's something specific that you want me to check out, let me know. We didn't do a monthly wrap-up for the month of June, so I wanted to do that. I think that's pretty important to look at the numbers for June because when we break down the data, it's a little concerning, especially how advanced certain market segments have become. And to me, anytime something becomes a total outlier, then there's warning signs. And I think we're almost there. So we'll dive down that route. I also have some listener questions that have come in, so if you have something, feel free to send those on in. I see we got Eric. We probably got Chris, who's sweating away up in Northern California on the job. Terry, Tom, Ivzy, Michael, Gems. Oh, we got Gems in here. New one, Gems. Good to have you, Gems. Big Eb, Thomasina, and Les. And there we go. Fernando as well. If you are new, hit the subscribe button, and we'll get you up to date on any videos I post, which I do every day, Monday through Friday, live at 2 p.m. Pacific. Okay, before I dive into this fun stuff here, which is a trading week wrap-up and getting ready for some fireworks this weekend, my poor dog is already freaked out. I wanted to get to this. For those of you who might not be a part of it, I know it sounds stupid, but honestly, sometimes it's just fun to be a part of a group think or group task, and I've been doing these challenges for months now, and I find them very beneficial, especially when I have other people do it with me to hold me accountable and say, hey, you should be doing this, or did you do your X today? For July, I'm changing it up. I'm tired of doing the push-ups, so I'm actually doing 100 sit-ups a day, and I'm also going to do continue with my 30 minutes of German or base. It's pretty much been 30 minutes of German a night, so I'm really enjoying that. My German's getting a little bit. Ich spreche ein bisschen Deutsch. But ich habe Durst. I'm thirsty right now. So there we go. I'm learning my little bits of German. Hopefully you guys want to join this. If you do, you can email me. It's tradermerlin@gmail.com. Let me know what it is that you want to achieve or do every day for the month of July. Thomasina is going to work on writing her book and rehabbing that ankle, who's here today. Hello, Thomasina. Rob says, I'm not going to be drinking on school nights. I like that. And up at 5 a.m. every day. I'm not sure I'm going to hold you accountable for that one, Rob, but I will support you in any way that I can. Hopefully we can push forward and get you to achieve those things. So if you want to be on this list and me call you out a few times over the month of July and hopefully push you to keep doing it, do it. Read a book, go to the gym, go swimming, practice guitar, whatever it is, find something that you want to get better at and improve your lives in one way or another and do it continually for the month of July, and then we'll see how we are at the end of July. If you're doing something physical exercise-wise, I would encourage you to take a picture of yourself before and after. It was very interesting for me to do the push-up challenge. I did it about a year ago. Was my first time I did it. I noticed a dramatic difference over that first month of doing so. All right, so let's go back to the challenge board, and I'm going to go into July review. Sorry, it shouldn't be July review. Who the heck made this? Let me talk to my crack team of developers who are building materials for you, because apparently it's not the July review, is it? That would be the June review. So let's change that. There we go. Okay, so we got our June review. For once, I've actually took some time and prepared this. I had a little bit of time today, and I want to make sure we understand why this is so important. We'll break down the beginning sectors here. So I'm going to start things off with crude oil. Now, I go over 7 market sectors, although I'm not going to cover the 10-year in this one. I'm just going to go over the major market indexes. Crude oil doing great, up 11.22% for the month. I will bring up, as we look at this, I'll show you those charts as well. Here's your crude oil chart. As you can see, we had that little kind of breakout zone. It's ripped above it yet again yesterday. Looking strong. Really, OPEC not doing what most people expected them to do, which is talk about increasing supply, right? Increasing production, and that would drop the price of oil. That didn't come up at the meeting over the last 2 days. So, to me, it's just more upside potential here for crude oil. And already, it was the best performer for the month of June, posting 11.22%. Awesome. Now, going down the list, we'll next step into the NASDAQ 100, 6.38% for the NAS. And it really, over the past couple days, have been just real strong. Here is what happened on today's trading for the NASDAQ. You can see a real big candle to the upside on that sideways breakout, really kind of doing what it has done. Every time it hesitates, it seems to pop even higher. Now, I will show you, there's little candles right here where my cursor is at. Big rally, hesitation, rips the next day. Hesitation, rips the next day. Hesitation, it actually sold off, which got me into a short trade, which ultimately stopped me out for a loser. That's okay, it happens. And then we ripped to the upside today. So right now, not best thing out there, strongest thing out there is NASDAQ, 6.38% for the month of June. Again, stellar numbers. And for those of you who don't follow the markets as detailed as I do, your average return for the markets is looking to be about 8 to 10% per year. And we're pulling down 6.38% for the NASDAQ in 1 month. Pretty impressive. All right. Next on the list, S&P 500, the dog that wags the tail, so to speak. Nowhere near the S&P gains, 2.28% for the S&P for the month of June. And really, if you notice what's happened recently, unfortunately, or I guess fortunately, it does not include this most recent candle that we see spiking these last 2 days. July is off to one hell of a start. It is ripping the first 2 days of July. So it was insane, Pepe. It just did not want to stop. It's funny because, you know me, I've got this short bias, and I kind of kept looking at it going, no. Didn't pull the trigger on any shorts out there today, so just said I'll sidestep the market and leave it alone for today. But there's your month. Really nice moves up, especially in the S&P 500. I mean, you look over the last 10, 12 days, we've had one down day. I mean, that's incredible. And we're back to these just irrational exuberance phases for sure. I'm sure Greenspan's just having a cocktail right now, joining us for Cocktail Fridays and enjoying this market surge. All right, I'm going to keep going down the list because I want to break the S&P down into its 11 sectors here. If you look at the Russell 2000, this is one that I have been selling puts on. It was definitely the weaker of the three indexes so far, only up 1.9%. Now, I'll go to the charts here, and you can see the difference. I'm going to actually just stretch this yellow box. Every week or two, it seems like I continue to stretch this yellow box out because it's just trending out sideways, right? Chopping sideways. You can see this Russell 2000 really just bouncing back and forth on it. So I'm okay to be selling some puts here as I think it's going to come back down to the middle of this range. I believe the IWM puts I have are at 212. So I'm really at the bottom end of this range with puts. So nothing really exciting. To me, this is the most boring of the three indexes, S&P, NASDAQ, and Russell. And I agree, Big Eb. I think this could, I don't know about another 3 years. I think a year or two down the road, as soon as they start to do the bigger rate hikes, where they're going to, I think what will end up happening is over the next year, we'll see inflation becoming more of an issue. Not dire, but I think it's going to become an issue. Rates will start to get raised, and then all of a sudden the machine will slow down a little bit, and then it'll start to roll over quickly. I don't know if 3 years is the timeline. I'm thinking maybe a year and a half before we see like the really big sell-off or another recession because of all the money being pumped in the economy. Pepe asks, what am I drinking today? This is Slane's. I think it's an Irish whiskey. Pretty damn good. It's a free bottle. I can't complain about that. Maheen. Wow, thank you, Maheen. I appreciate the contribution there. Maheen, if you have any questions or want me to go over anything, you've got priority right now. So thank you so much for that, Maheen. I do appreciate that. All right, back to our screen here. Russell was 1.9%. We keep going down the list. Bitcoin. With all that's gone on with Bitcoin, you're probably thinking this has to be the biggest loser out there. No, it actually was not. The month of June, honestly, wasn't that bad. It was before that. It was the month of May that was just absolutely chopped it off at the knees. Down 3.26% for the month of June. And you can see here really just traversing sideways. It just can't seem to get its feet back on the ground. Every time it has a little bit of a rally, it gets crushed right back down. So not very optimistic right now on Bitcoin and cryptos in general. It's just not looking great from a technical perspective. Of course, those that know me, you all know that I am definitely bullish on cryptos in the long haul, but right now a bit of FUD spreading into that market and pushing it down. So unfortunately the portfolio is taking a little bit of a hit, but we will be okay in the long run, I feel. Let's go to the worst performer. I'm sure you guys have probably guessed what it is by now. I actually bought some call options on GLD because gold took a big dump in the month of June, down 7.02%. And the reason I think this is probably the most interesting thing to happen in the month of June is the way that it sold off. Check out gold here. Here's GC futures contracts. That big drop, that giant red candle, I believe that's when I jumped on my call options here. Just seemed a little surprising to me that you would have something like gold, which for all intents and purposes should be that recession currency, that inflation currency. And if inflation was in fact higher than expected, which it sounds like Powell was hinting at, then we would probably see gold start to move back up. It has over the past couple of days, but still feels like it's somewhat traversing sideways. I'd like to see, obviously I want to see what happens next week, but I have a feeling we'll start to see gold slowly start to creep back up, fill those gaps, and maybe get back up to those highs that we saw back in May. That was your worst performer out there, and that's kind of our 6 markets. I didn't really go over the 10-year, which we could have looked at as well, but I don't trade the 10-year, so if anybody wants to, I'll look at it, but it's not something I'm in. All right, so that said, when we look at those indexes, obviously the sell in May and go away piece isn't really holding strong, right? Normally it's the sell in May and the markets slowly drift down a little bit, not much in the way of gains. That changed last year. It's also very different this year, so different market dynamic right now. It's just bullish, risk on kind of mode. So let's break this down even further because I want you to see something interesting here. On this June review, I'm going to go to the S&P 500 and show you the 11 sectors. So if we start off with the S&P 500, this is based off of the ETFs, right? So the numbers I presented to you earlier for me is off the futures markets. This is actually off the exchange traded funds because you're probably thinking, Merlin, you got 2 different numbers here. You have the S&P up 2.28% on one screen and up 1.99% on the other. All right, let's just call it 2%. But this is based off the ETF. Now, I put S&P right here because I want you to notice a couple different things. You have real estate, which I have it below. It's on the positive side, but just barely. It's only up 0.17% for the IYR. Then we can all of a sudden see communications, discretionary, healthcare, and technology. It really starts to see bigger gains. Obviously, technology up 7.22% for the month. Pretty impressive. I mean, that is a very good gain. Of course, that's what's propelling this NASDAQ higher. You have things like the FTC legal issue going on with Facebook moving to the upside. You've got great moves by NVIDIA and companies like that. So a lot of real good optimism in the tech space. But here's where it starts to get interesting. When you look at this, it's important to understand the weightings. And I don't have the current weightings as of today, but the numbers I have for the end of the year showed IT, XLK, which is what I'm using for technology at the top there. That's almost 30% of the S&P 500 now is technology, XLK. And you can see why the S&P did so well is because you have technology pulling it up 7.22% for the month, and the S&P itself is 7.22% technology. Now, this is going to get interesting when we look at the losers this week, right? The number 2 weighting in the S&P is healthcare, and you notice that was the second biggest gainer. Number 3 in the S&P is consumer discretionary, which was number 3. Number 4, biggest weighting in the S&P 500, coming in at a whopping 11%. Can you guess it? Communications. So what we have here is all of the heavy weighted items in the S&P 500, the ones that are overweighted in that index, are all the biggest winners. This to me is where you have the outliers showing up. You have all the heavy-weighted stuff running the strongest, and all of a sudden that's creating a skewed interpretation of market gains. But wait, there's more. So we go to the loser side of this. We'll start off with S&P again. Oop, I got them out of order, but it's okay. You can see consumer staples, energy, utilities, industrials, financials, and materials all down. Materials really taking it in the chin. You're like, oh man, materials are going to bring the S&P down. Anybody take a guess at what percentage of the S&P 500 is material companies? Anybody? Bueller? Anybody? I'm curious what you guys think. What percentage do you think, ballpark, give or take 3 or 4%, what percentage of the S&P 500 do you think materials makes up? Because you look at that screen and you're going, well, shoot, materials are going to bring the market down, right? Not really. It's actually a very small percentage. When you look at the percentage weighting of materials in relationship to the S&P 500, it's about 3%. So crazy, when you look at technology on this screen, I'll bring it up for you again, you look at technology and you're going, okay, technology was up 7.22, materials were down, let's call it 7%. Those should balance out, right? No. Technology is almost 30% of the index, and materials is only 3% of the index. So totally, materials is almost irrelevant. Even though it's down 7%, it's really not going to have an impact. Oh, but you're thinking financials are pretty big, and you would be correct. Financials are about 10% of the S&P 500. So this was probably the biggest pain point for the S&P this week was the financials. Industrials, about 8%. Utilities are about 3%. Energy, 2.3% of the S&P 500. And staples right here is about 6%. So all of the losers really aren't that impactful on the overall index of the S&P. all of the winners are big, impactful ones, except for real estate. Real estate doesn't really have, it's about 2.5%. Anyway, I thought you might find that one interesting. So there we go. So, yeah, financials are down. Why is that? Let's go. So let's see. Les, you got a big number there. Yeah, you got most of you right, Mike. Mike and Michael, you got that one right around 3%. It's just, to me, it's interesting when you look at something and at the end of the month or end of the week or end of the day, we say, oh, this index, S&P or the NASDAQ was up X percentage. You could have something like the NASDAQ be up 5% on the day with, let's say, Apple, Facebook, and Google are up 6%, and the other 97 companies could be negative on the day, and those 3 companies will boost it because they're so heavily weighted in an index. Tom says, I see nothing. I could drop on his foot on the left side. I don't. Well, even if you had, say energy, if energy went down 20% for the week, would it have a huge impact? Yeah, it probably would scare the markets and make people freak out a little bit. But the fact that energy is the least weighted component of the S&P 500, and I think it's moved up a little bit since these last numbers. It's probably closer to 4%, but still, it's nothing compared to IT, which is closer to 30. So, very skewed numbers. Yeah, no, Les, I don't think you're optimistic. I think what it should be is if we take these 11 sectors, right? You've got the S&P 500, so it should be a very simple calculation. I will take 1, and I'll even bring it over here. I'll take a calculator and I'll say 1 divided by 11. So every one of the index, every one of these sectors, for me, should be 9% of the index. And if it was up to me, every year I would rebalance it. So on January 1st, all of these got reset to exactly 9% of the index. It creates a skewed version for me of the market. I think it's really kind of, I guess, lopsided. When I look at the way that you and I should be handling our personal investments, our 401ks, our IRAs, we should be rebalancing, because over time what will happen is one asset will become too big in the portfolio, and therefore it exposes you to risk. So forget about the markets. Forget about everything I just showed you right here. I want to go, I got that one, Cheryl. I will definitely get you that question today. Forget about the market overall and just think of your own personal portfolio. If you had 5 different positions in your portfolio, and you started off with a 20% allocation to each one, that's 100%, you got 20% in each position. At the end of the year, if one of those positions jumps to 40% allocation, it means that some of those other ones have declined as percentage. Now what happens is the risk exposure to you is now actually greater because that one represents 40% of your portfolio, where initially it was 20%. So if there's a big market pullback or drawdown in that 40% piece of your portfolio is at risk. This is why I brought this up, because if you look at technology, healthcare, and discretionary, those 3 combined are over half of the S&P 500 valuation. And those are the ones that are soaring right now. If those take a hit, that's, people are asking what's going to be the black swan. What could potentially bring it down? A jolt to technology, healthcare, discretionary, primarily technology, creates a spike down, and that could start triggering other things. Now, that's obviously going on a limb and saying black swan type events, but people ask what could cause it. Something like that, where you have a piece of a portfolio that's so overweighted, if that gets jolted, it jolts everything else. And right now, especially based off some of these numbers you saw for the month of June, it's further stretching out that weighting in technology, healthcare, and discretionary, creating, in my opinion, a little bit more risk in the markets overall. Obviously, you look at the trends of the market, it's still looking pretty damn good. Now, if you're wondering where I got that from, I have this little chart here that I created. I know it looks like a really bad EKG, but I just do an anchor point on the first of the month, and then I remove the last 2 days, and you can see all the different numbers, and these are the 11 ETFs plus the S&P 500. So there you go. Hopefully you found something entertaining or at least eyebrow raising there. It was a great month for all of you. I'm sure everybody here prospered because you probably have a 401k, you probably got an IRA. You had a great month of June. Just know that it's all of a sudden getting bigger and bigger weightings on tech, which creates more risk overall. All right, time for a sip. It would be great if I had a whiskey sponsor. All right, let me see. Since Cheryl is here, and Cheryl sent in this question, I will go to it right now. It's actually multiple pieces. I don't have any diagrams or examples of it, but there's kind of a challenge to this one, and I'll see if I can get through it, Cheryl. And by the way, if you guys have any questions on the month of June or the numbers we went at, please just type it in. For those of you who know the show well, you simply type in a couple question marks before you send it in so I know if it's directed to me. I look at the question marks and saying those are coming directly to me. All right, so Cheryl's question. What is the cost of a trade? Because I realize you have fees and commissions, but what about taxes? For example, say I have a profit of $200 in a trade. Is there an approximate figure that I can look at and say, okay, this is money that I made after taxes and fees. Do I take about half of that? Very difficult one to answer. Extremely difficult one to answer. Obviously, it's not all going to be yours, right? There's ways that you can increase the piece that you take home and ways you can lower it. So most of the time it's going to be ordinary income, which is taxable, or actually depending on how your broker or your tax guy sets it up. You've got short-term capital gains, and you also have long-term capital gains. You know, one's going to be capped at 20%. The other one could be based off what your income is. So if you're in the 35% tax bracket and you made $200, all right, well you take 35% off of that. You're looking at $70 comes out. You got $130 to keep. Okay, now you've taken out some fees as well. Maybe you get down to, I don't know, 125 out of that. So there's things that you could be, or we can be doing to lower our tax bracket, whether that's specific investments, you know, going into, there's obviously traditional IRS, but if you use tax deferred things, you could drop down your income base and therefore potentially lower your tax bracket, which would in turn allow you to keep more of those potential earnings. The other thing that you can be doing is looking at different asset classes, right? So for me, the big thing here is long-term capital gains versus short-term. There's a huge cost difference there. So if you go past a certain time, you get long-term capital gains. You could also be looking at futures contracts, which are 1256 contracts, which allow you to keep more of the profits because it looks at each trade as being, because futures were designed to be a short-term trading instrument. Therefore, when you trade those, they say, okay, I think it's 60% long-term, 40% short-term. I might have gotten that backwards, but it's 60-40 split on long-term capital gains and short-term capital gains when you're trading futures. So it's one of the reasons people love looking at the futures market, because if you're an active trader, that would come as normally short-term capital gains. But because it's futures and it's designed to be a trading instrument, and somebody lobbied politicians in the IRS or somehow got this through, that trading actively in futures should be a long-term capital gains thing. So you have the benefit of a long-term, short-term capital gains split by trading futures. Even if you did options on futures, I believe that it also gets you the 60-40 split. So there's thousands of different things you can do to influence exactly what you get to keep. Now, does it take about half of that? I would say no, I don't think it takes half of that, but it certainly is going to take a good chunk. I honestly don't even think about it. I just keep trading and try to make good trades. So at the end of the month, or end of the year, month, quarter, I have money in my account. Second part of your question was, so as a day trader, does it cost more because you're doing more trades, or does it really matter? It doesn't matter, right? So let's take a step back and look at the two factors here, which are, number one, I'm a day trader. And number two, I'm doing more trades. If you're a day trader, you're going to be much more active. So generally, that's going to cost you a lot more money simply because of commissions, right? Somebody who pays transaction fee for one in and one out over 6 months is paying a lot less in fees than someone who's doing 300 ins and outs in that same period of time. That said, a lot of equity platforms now, stocks, it's free, so you don't need to worry about that cost anymore. It's, they're selling order flow is what they're doing, but it's okay. So I don't think that has an impact on it. The challenge, if you are, so it's better to, from a cost perspective, to be a day trader. I would say no, because if you're a longer term person, you're more likely to have trades that end up being long-term capital gains. That's where you'll save a lot more on your money. As someone who's looking at daily and weekly charts and being more of a swing or position trader, you have the benefit of time. And some of these trades could last years. I know we have some viewers here with us today who are in trade, still in trades. They've been in for a long time. That's going to be long-term capital gains. Whereas when you're active, you're going to be paying more taxes on the trades that you make. Now, who knows? As administrations change, whether it's Democrat or Republican, there's been many talks from both sides about taxing traders and really raising the taxes on traders and fees. It's, who knows if that'll come to fruition and what that will ultimately be. Bottom line is, don't buy Shiba. Fernando, you and your Shiba, dude. Cracks me up. Let me guess, you're one of those guys that thinks it's going to go to $1. Let's see. The other part of this question here says, is it more expensive to have several smaller profit trades as compared to one larger profit? No, it's all basically going to be the same thing. The biggest challenge here, Cheryl, is the time that you're in it, right? It's long-term capital gains versus short-term. If your large trade, you do one trade, let's say in a week, great. If you do 20 trades in a week and you make the exact same amount of money after fees, it's still going to be taxed the exact same way. Exact same way. All right. So Cheryl, let me know. What other questions you have on that one? I know is a quick overview. I'm not a tax CPA, and that's not tax advice. It's just my experience in it and knowing kind of how I look at the tax. The other thing that you want to be careful of, if you are a very active trader, you want to find a way to get yourself to declare trader status. It's really important for some, especially for me, because I'm doing so many transactions. I need to be able to buy and sell the same thing. So, for example, a wash sale rule is you can't buy or sell the same security within 30 days. So let's say I bought Microsoft and I sold it that week. In theory, I'm not allowed to buy it again and claim the gains or losses on that for another 30 days. If you're a trader status, wash sale rule it goes out, so you don't have to worry about these things. But talk to your CPA. There's much more details, and who knows, those rules may be changing or have changed. I'm declared as trader status, so it's fine for me. But for somebody who's doing a lot of active trading, wash sale rule becomes really important. And again, Cheryl, if you got some more questions, type them on in. Hopefully we can get to all the stuff that we got today. I went through all my listener questions. Wow. Fernando, you realize that if Shiba Inu coin got to $1, it would be a $1 quadrillion market cap. 1 quadrillion. It'd be 500 times bigger than Apple. Pretty sure that's called smoking something that you shouldn't be smoking. Italy beat Belgium? Nostro Azzurri! Vai! All right. How many trades do you take daily on average? Anywhere between 0 and maybe 10. 10 would be a very high end. I've been so busy with doing this and building content for OTA and designing other content that I haven't been able to be a very active trader. So I'll probably make a couple of trades a day. I'm trying to be much more selective because when the time I do have, I want to make sure I have the right trade. So a lot of it's based off of alerts. So yesterday's trade on the, or not yesterday's, the trade that I really wanted to work out, I actually thought it was one of the better setups, was this Monday when you had the NASDAQ the NQ break down below some lows. It was all alert based. I was doing something else and I have my program set up so it popped up on the screen saying, hey, this condition's been met, went out there and jumped on the market. But mostly it's going to be 0 to, call it 10 max. Probably 10's the maximum I've done in a day over the past couple weeks. Generally just a couple of trades a day. Do you set alerts mostly on your trades? No, I would say about 50-50. It depends, Peter, how busy I am. So for example, I've been getting increasingly busy, and I think that this train is unfortunately getting me more busy going forward. So it's becoming a challenge to do all the things that I like to do and want to do. So yes, I am doing more over the past month or so with alerts so I can focus on something else. But I love sitting there staring at charts. I know, it's this weird little addiction, but I would say about half now are going to be done based off of alert setting. Hey, Scott. Good to see you. Cool. Who is Mr. Atias? Mr. Atias used to run OTA Tax Bros. I'm not sure. I think he moved to Israel, I believe. I'm not even sure if OTA Tax Bros is there. Don't know. But he used to be the guy I brought on to talk about trader taxation. I'm actually trying to find someone that... I guess I could reach out to Michael. It'd be an opposite side of the world thing, but he really knows his stuff with regards to trader taxation. And I think, as you're picking an accountant to go with, it's important to be able to ask specific questions. Like, do they know the wash sale rules? Do they know the criteria for trader status? Are they familiar with trader taxation? Because there are different, I'm not going to say loopholes. There's just different tax structures and ways that you can keep more of your money by doing certain things on your taxes. And it's not like an H&R Block kind of thing where you just go, okay, I'm going to go on and take, TurboTax and plug in a bunch of stuff and I'm going to get the best results. It's about knowing, and I think you look at President Trump, or I don't know, you call him President Trump? Is it former President Trump? I guess you're always president, right? There's a lot of speculation why he would never show you his taxes, because he's probably doing what I would be doing if I had that kind of assets. is I am funneling things all over the place within legal parameters of the tax code to put down my tax liability to like as low as possible. And there's so many little things that you can do as a consumer. Like you and I can do a lot of different things. Unfortunately, you got to spend some money to get a good CPA who knows all those little details. It's nothing illegal. It's loophole sounds so illegal, but it's not. There's just provisions in the tax code that says you can do this, but you have to do this, 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 and this. Okay, well, I'll do those things. I'll do this, and all of a sudden, I'm making myself an extra, or saving 5% on my taxes overall. Awesome. You know, anything we can do to save even 1% on your tax bill, tax liability, is going to be good. And there's certain things you can do, from moving money to different places and different assets to, you know, contributing to specific places. It's a pretty big Pandora's box, if you will. I know that my boss says that's always a negative connotation, saying Pandora's box. Well, I think the tax code is a pretty negative thing. Let's see. Oh yeah, Mario, we do have a lot coming. We do have a lot coming. Was denken Sie von, what do I think of the Triple X? Are you testing my German? Sehr gut. Alles in Ordnung, Michael LaRusso. You want to know about FNGU, huh? Let me go in there and check that one out real quick. Oh, actually, let me make sure I got to, I want to make sure that Cheryl's question, got it. Really appreciate that. Most of the futures. Okay, cool. Yeah, by doing futures, you're saving yourself there. Really, again, for me, the biggest number is going to be long-term capital gains versus short-term. There's a big, depending on what tax bracket you're currently in, that can have a huge impact. So talk to your CPA and be like, hey, what are some things I can do to lower my tax liability? Obviously, futures are going to be one of the best moves as far as a trading vehicle goes, but there might be some other things that they can set you up with. Do I set alerts? I already went through that one. Sideways. Do you trade soy or wheat? I don't. You know, every now and again I'll dabble in those, but for some reason I go back to what works for me, and predominantly indexes. You know, indexes. I'll trade gold. I'll trade oil. Wheat, soybean, lumber. I don't really. I've never traded lumber. I've traded wheat and I've traded soybeans, but it's not an active one for me. You know, a part of it is this. I know this is going to sound weird. You're like, wait a minute, you've done this for so long. Why would this be the case? There's a certain element of fear for me trading commodities like lumber or corn or soybean or wheat, because they move so quickly based off reports that I don't follow. Right? I'm not watching these reports that come out with regards to inventories and stocks and planting and grower seasons and fertilizers. If you're into wheat and soybeans and corn, I mean, these are things you got to be watching, and weather patterns and stuff like that. That's stuff that I just don't take the time to research. Don Dawson, who used to be one of my, I'll say, mentors with regards to commodities, you know, he's always glued to these reports and looking at all the details of what are they talking about production. Are they planting more this year than they did last year? And what seed are they using? I don't know. I don't go into that. So that creates an element of risk because these are factors that I don't know. The other side of it is there's very, very extreme volatility with some of these commodities. I mean, if you look at the lumber chart, let me bring up lumber. If you're on the right side of things, it's awesome. But if you're on the wrong side and you're getting lock limited, I mean, this can destroy you. Here is, let's go look at lumber here real quick. Lumber has been just absolutely nuts. Where did my lumber go? There it is. If you look at this price chart here for lumber, you notice these candles like look really big, like they open and close right at the bottom. This is because this one opened lock limit down and closed lock limit up. And then over here, lock limit down, lock limit down, lock limit opened at lock limit high and sold off, lock limit down, lock limit down. I mean, these are crazy moves that if you get stuck in a lock limit, to me that's some scary crap. Lock limit is basically I'm stuck in something that I can't really do anything about right now. I literally just have to go, I really want this market to open back up so I can potentially get out of my position. It's scary if you get lock limit. So to me that's I don't know, it's a little bit of a problem. So I just shy away from it. Not that there's anything wrong with those instruments. You just got to know what you're doing. Especially know all the little locks and circuit breakers that go on, because they're all different. So corn, wheat, soybeans, live cow, all have different circuit breaker limits. Make sure you know those things, because nothing makes you pucker up quicker than a trading halt or getting lock limited on something. What's the deal with AMC? Who knows? It's crazy. It's Cheryl. It's called the wash sale rule. The wash sale rule. There you go, John. Thank you for giving me the right word. It's not loopholes, it's effective tax strategies. It sounds so much more professional, right? I need some effective tax strategies. No, you're just using loopholes, buddy. Dankeschön, Mike. Dankeschön. So let's go look at has paid a lot of bills for me. Yeah, Tom, you've been bullish on that one for quite some time, huh? What it is you're talking triple fang stocks. Let me go FNGU. I'll bring that bad boy up. If you look at this chart, obviously it's got some pretty wild swings. This is the triple. Why is it 38? Did they just do a split on this one? They must have. Tom, you follow this one way more than I do. I'm guessing that this thing did some kind of split because it was much higher than this. So anyway, you know, the only thing I find interesting about this select FANG stocks here is if you look at the high from February, you would think that being leveraged as they are, that this would be over those highs. But no. Still looks strong, looks great. Right now you've got really what some people call a flag, a high-tight flag pattern on FNGU, which is a real big surge and then sideways traversing of price action. Let me put it on here for you. So they would call this yellow box your flag and then say, oh, well, the pole is from here to here. And that is a very positive sign. So, yes, it looks great right now. And again, one of the major factors in this is going to be Facebook, obviously with the FTC, not settlement, but the dismissal, at least in the short term, of that court case. You know, it does bode well for FNGU to the upside. And there you go. Yeah, I figured there was. I thought when you were looking at it, brought it up a year ago, that thing I thought was like at 120 or 140, so looking fine. Do I use fib calculator? I don't use a fib calculator. I use fib extensions, or sorry, retracements. I know a lot of people. Oh, my cousin's watching. So for those of you who don't know, I was born in Munich, Germany, and my cousin, Melanie Deinsdorfer, is joining us today from Munich. So hello, Melanie. Good to have you with us. Sorry, yes, I told Melanie last time I was out there, which was probably 2 or 3 years ago, I'm always embarrassed that I can't speak German, because as a kid, I could speak German. But when you're a kid growing up in America, I think I came here when I was 3 years old. When you're a kid growing up in America and you have a German accent and you speak German, oh boy, they pick on you like nobody's business, right? So I did my best as a kid to boycott German, not speak it, and make sure I lost my accent. So I owe it to Melanie. That's kind of why I started studying German again. And I've been asking her to send me some German cartoons or something to help kids learn German. Good to have you with us. Next time I come visit you, Melanie, I will be speaking German. Yes, ich spreche ein bisschen Deutsch, natürlich. Okay, so good to have you with us, Melanie. Of course it's a Dankeschön. Okay, Dankeschön means you got to be polite. I don't need to be polite. These are my friends in here. This isn't a courtesy room. Let's see. Let's see, what else do I have? So, Scott, I'm a huge fan of fib retracements, not necessarily using some kind of calculator. What you'll notice in the industry is there's a lot of derivatives of Fibonacci. So, for me, fib retracements are probably the best. But then you have fib extensions, which a lot of traders use and help you gauge where things might be going, right? It's all very subjective. I hate certain pieces like fib timelines, fib arcs. I mean, these to me are just derivatives that somebody out there decided to make themselves famous by creating some stupid derivative. So let me go and show you an example. Do I have them on here? Oh, I do. Oh, I love it. All right, so if we were to do, let's just say since we're looking at FNGU, right? Let's just say we're looking at fib retracements and going, okay, from these lows back here on May, whatever, 12th, 13th, it rallied up to these highs. Here's some retracement level potential. And I actually like this $32 mark as a retracement point. Well, it doesn't line up exactly with the fib number, but you can see there's fib 38.2, you got 50, 61.8, etc. If we do the same thing, but you do what's called fib arcs, from the same point, go from here, and I move that second one to this point up at the top, it basically is going to try to calculate when the next dip's going to be off of these arcs. Actually, this is time cycles, excuse me. So I don't know. I don't see the benefit there, but it's somebody's tool. Here is Fibonacci arcs, which is this dumbest of them all. And let me change the colors on this just so you guys can see it, because I know it's hard for you to see. Oh man, they're all really dark. I'll make them just heavy. Boom, boom. So I'm trying to make these lines bold so you guys can see them all real quick. So here's your Fibonacci arc. What is this supposed to do? Right? Basically what this is saying is, since the price chart is only moving one direction, right? This price chart is only moving to the right. Price will never go back to the left. It will never go perfectly straight up forever or perfectly down. It's always moving to the right here. When new data comes in, the next candle comes in on the right-hand side. So it's basically saying, it guarantees, in my opinion, it's basically guaranteeing that at some point, price is going to hit these target lines. No shit. Really? Wow, that's a genius tool. I don't know. I just think it's very, very stupid tool. And there's a lot of them. Fibonacci timelines, Fibonacci arcs, spacing. I think here's another one called timelines. Yeah, here's timelines. They're all, to me, dumb derivatives. Personally, I would just stay with Fibonacci retracements. That's all you really need. Long story short. So, great question coming in there on Fibonacci. Thank you for that one. And yes, my cousin is right. I'm not German. I have to take that back. She always says, "You're not German. You are Bavarian. The Germans stole Bavaria from, and then they made part of Germany, so I am Bavarian." And much to my cousin's disappointment, I have not put on any weight. Every time I go over there, she's like, "You're so skinny. You've got to eat." I just don't look German. But I fit in my lederhosen great, didn't I, Melanie? Even with my bad socks on. Let's see what else I got. Merlin, what do you think about the shorting NVIDIA after the 4-to-1 split? Okay, great question. So as you guys know, there's a 4-to-1 split on NVIDIA coming. Don't short it before then, because when it's a popular, strong, uptrending company, don't ever short those things before they split. It's a death curse. If you go here and go to NVIDIA, NVDA. Yeah. I got it. So NVIDIA, we talked about this one when they announced the split, and basically we said, don't short this thing. You can pretty much just go long and ride it out until that split. Now, what the good news is, that split's coming up, right? You got a couple weeks until that split happens. I think afterwards, I would be okay shorting it. You got to be careful, though. Because of the inherent strength of NVIDIA, and I'll just look at the weekly. I mean, this chart is just crazy. I mean, you're up, what, 30%? Is it 30% in the last 2 months, month and a half? Unbelievable. Great. NVIDIA, I mean, they're just selling orders for these new graphics miners as well, like off the chart, these mining rigs for cryptocurrencies and stuff. So I think Riot Blockchain bought a huge amount of custom-made stuff from NVIDIA, and that's helping their bottom line as well. I think that if you are thinking about shorting after, is probably the best time to do it. But again, make sure you have a stop loss in place, because NVIDIA right now is separating itself from the herd in a major way. I mean, they're looking like they're the best in the industry. They're just dominant. You can't even get their chips or their video cards anymore because they're just completely sold out. Especially with the chip shortage, this is just I think it ends up driving the prices and bottom line up for them. So yes, I would be okay shorting it after the split, but just be real careful. Make sure you use a stop, because you're shorting one of the strongest stocks in the marketplace right now if you think about doing that. All right. Kevin says, I need to figure out how Larry was able to call NVIDIA. Well, if you go to Strategic Investor, it's pretty much in there. It's looking at a combination of predominantly fundamentals and looking at balance sheets, and then going into the technical side of things. So Larry likes to use a combination. So he'll use the Benjamin Graham, Warren Buffett's theory and applications about looking at fundamentals. But really it's saying, I need to look at 3 to 5 years. That's my target. Man, I don't make trades with targets of 3 to 5 years. I'm looking at 3 to 5 days, maybe weeks at a maximum. So yeah, very different. I always love bringing Larry on, but maybe at some point he'll just create a full fundamental course, which I think he could. Oh, good. Did you see him at the symposium, Kevin? Bashir impressed me at the symposium. That was great. When he did his little presentation, I was like, man, Bashir. And he was moving 1,000,000 miles an hour because we were all in this really tight time clock. But boy, his presentation was very, very good. Yeah, he's just such a great guy. He's an engineer, so for him, it's process and application. It's just step 1, step 2, step 3, step 4, step 5. I may actually see you in that one. The good news for me is I don't need to pay for it. I'll be in the room as a fly on the wall watching that one. But yeah, the perks of working at OTA. All right, what else do you guys have for me? Larry called NVIDIA. Actually, it was Big Ab. He was on Power Trading Radio. He called it at $39. We have evidence of this. And then he comes back on and was like, it's 68. And I'm like, Larry, he's like, well, what would you do, Merlin? I'm like, I'm out. You're up almost 100%. Dump that thing, Larry. And he's like, no, I'm holding it. I'm holding it for this price point. And boy, it was phenomenal, man. And he's still laughing, right? I mean, his target when he first said at 39 bucks. I asked him what his target was, and it was 350. 350. I can even pull up the charts here of when he said this. So we can go, let's go monthly because it's going to be a while back. All right, so there's your NVIDIA. Nope, it hasn't done a split yet. It's in the process. But when he first called it out, it was back here. It was in 2015 when he was on PTR calling. Was it 2015? 16, excuse me. 2016, he was on there saying NVIDIA at $39, his target was 350. And then he comes on Power Trading Radio when it was up here at like 68. I'm like, dude, sell it. Sell half. Are you kidding me? Man, it's all live on air. It's all, you know, it's not making stuff up. It's funny because when he came back on the show here, it was like near 300 bucks. We're like, hey, are you going to sell? He's like, no. And everyone was giving him a hard time because it tanked. I mean, it went from 294 all the way down to $125. I mean, that's a pretty significant drop. And now look at it. Like, holy cow. He said, I'm adding to my position on this one because I feel so strongly about that 350 target. And I asked him about 350. I said, what do you think about it now? I mean, it's at 350, Larry. And he goes, you know what? I looked at the numbers. I'm thinking 500. It's like, okay, well, now what? And I wish I could show you guys my phone. I think he actually texted it to me today. Let me just, for giggles here. I think he did it today. Oh, no. Maybe it was on my my other account. But he says he thinks it's going to 1,000. He thinks it's going to 1,000. And I could see that. Heck, it might go to 1,000 by the time of the split, the way this thing is moving. Another couple weeks, who knows? Absolute diamond hands, right? I agree. That's the definition of diamond hands right there. And that's good company. All right, I didn't go and pull up any economic calendar or announcement stuff because there's really nothing to talk about. If you look next week, no big deal. The major stuff for this week was really looking at the numbers with regards to OPEC and was there going to be any supply increase with regards to oil, and that didn't happen. So unfortunate that didn't happen. You had today some interesting news with regards to the U.S. and their unemployment data. You know, you had the unemployment rate was 5.8%. They thought it was going to drop to 5.6. Things getting better, right? It went from 5.8 to 5.9. So we saw an increase in unemployment. But riddle me this. At the same time, non-farm employment change, non-farm payrolls, had a huge spike up. They went from 583,000. They expected 725, and they came out at 850. That's 270,000 more jobs than expected. That's a 50% increase over expectations. That's incredible. So we have this huge amount of new jobs, but the unemployment rate is going up. So I'm really curious to see what happens next month, or actually next week with unemployment claims, and then what happens in the next month's reading of jobs data, because that was a pretty interesting one for me to see those numbers so drastically different. And great increase on non-farm payrolls, and unemployment is actually increasing as well. Something's broken there. Oh, thanks, Big Eb. Yeah, give me a thumbs up. And it's cheers. Cheers, everybody. Again, I don't have the economic calendar because there is nothing really happening on Monday because it's the 4th of July. Hopefully you have a nice, quiet, safe to put your animals. I will just, I always like saying really strange things. I would highly encourage you to make sure that your dog's collar or your dog or cat's collar is tighter than normal. Also make sure that they have their tags on them so if your animal gets out, they can be found, because it's the biggest day of the year where animals run away because they're scared out of their minds. So it's great. I have an office inside my house. It doesn't touch any exterior walls. So I put my dog in here on a piece of foam. I have music playing in here. All the doors are closed so he gets to chill out and relax. So hopefully your animals will fare as well. And don't do anything too crazy, but it's 4th of July, Independence. Have a great weekend. I will not be doing a show on Monday. We'll be back on Tuesday. You should know, obviously, that markets have a lot of illiquidity on holiday weeks. So I would expect to see Tuesday's volume rather light and then maybe pick up near the end of the week. So just kind of keep that in the back of your head as you're trading on Tuesday. Volume's probably going to be a bit lower, which creates more volatility and implies more risk. So be careful out there with that one. All right, everybody, that's going to do it for me. Again, cheers. Hope you had a great trading week. An even better weekend. I will see you all on Tuesday. Again, if you are new to the program, hit that subscribe button. If you made it all the way through and you're new, well, cheers to you. Congratulations. You're a glutton for punishment. If there's something that you want me to cover, discuss, go over, talk to, bring on the show, just correspond with me, go to TraderMerlin@gmail.com. That's the easiest way for you to email me. You can put them in there, and all those that put comments down below the video yesterday, awesome. I'll address all those on Tuesday's show. Take care, everybody. Have a fantastic 4th of July. Be safe. I'll see you Tuesday.